Hello, this is Japanese Economic Review Channel. Today, we present the Economic Intelligence Briefing for June 2026. This report provides a macroeconomic diagnostic based on the Cabinet Office's monthly economic report. We will explore key domestic and global trends to help guide your strategic decisions in this complex environment. Our baseline assessment indicates that the Japanese economy is recovering moderately, driven by improving employment and income environments. However, this recovery is heavily shadowed by exogenous risks. Specifically, we must closely monitor the downward pressures from Middle East geopolitical tensions and ongoing volatility in financial markets. Comparing May to June, we observe positive inflection points. Personal consumption and exports are now picking up, showing clear stabilization from last month's hesitation. Meanwhile, corporate bankruptcies, which were previously increasing, have leveled off to an almost flat trajectory, signaling improved domestic resilience. To sustain this recovery, Japan employs a dual-engine policy strategy. Fiscally, the government is executing the FY 2026 budget for immediate price relief. Monetarily, the BOJ guided the overnight call rate to around 1.0% on June 16. The ultimate objective of this coordinated approach is to establish a self-sustaining virtuous cycle of wages and prices. To counter external shocks, targeted fiscal interventions are in place. The government is implementing emergency mitigation for fuel pricing and securing alternative crude oil supplies. Notably, the Middle East Response Contingency Fund has been activated to ensure supply chain integrity and manage global crises flexibly. Looking at the domestic scorecard, key indicators like consumption, employment, and capital expenditure are improving. Public investment remains steady. However, while corporate profits are rising, they face risks from Middle East tensions. Rising corporate goods prices require cautious monitoring of future business sentiment. Capital markets reflect extreme responsiveness to exogenous shocks. The Nikkei experienced high volatility, dipping to the 64,000 level before surging past the 72,000 range. Simultaneously, the yen continued its depreciation trend, reaching the 161 range. This underscores the critical need for agile financial risk management. Globally, growth is highly fragmented. The U.S. continues its moderate expansion, while China is decelerating due to its real estate slump. The Eurozone shows a pickup, though Germany stalls. Across all regions, geopolitical uncertainty, particularly in the Middle East, remains the overriding risk factor for global trade. In conclusion, Japan's domestic recovery remains fundamentally strong, supported by rising consumption and wages. However, its trajectory is inextricably tethered to global geopolitical volatility. Middle East tensions act as an exogenous shock, threatening global expansion, domestic energy costs, and corporate profit margins. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.